Grayscale, a premier cryptocurrency asset management firm, suggests that forthcoming Bitcoin halving could chart a unique trajectory unlike past occurrences. The anticipated reduction in sell pressure, coupled with the burgeoning applications for Bitcoin, hints at a probable uptick in price stability post-halving. This event, integral to Bitcoin's design, slashes minor rewards by half, historically setting off substantial price rallies. So don't forget to subscribe, like, and share, and let's start. Bitcoin, no big correction coming. This is pre-halving accumulation that we are in. The Box 1 innovators, early adopters, for 417 days. Halving 2, Box 2 early adopters. Halving was over here where we looking at. And Box 3 late adopters, early majority happened over here. As early and late majority, halving is over here. The rise is over here, up to $1 million. That's what we are looking for. Breaking news: Wall Street ETFs are buying 12.5 thousand more Bitcoin per day than the network can produce, increasing the demand and price. Also, Bitcoin halving fun fact: at the end of each halving cycle, the percentage of total Bitcoin left to be mined corresponds to the block reward from the previous cycle, and expressed as the percentage of the total supply of 21 million Bitcoin. I'm not sure who needs to hear this today, but the Bitcoin bull market hasn't even started yet. Instead of fixating on price, I suggest the following: head down, work hard, stack sats while they're still super cheap. Bitcoin rewards productivity. If you're not being productive while you hodl, you're just trying to time the market. And that's the pure truth. Quick Bitcoin update: the bulls need to break 49,000 for continuation. We have lost momentum. Red AO on the 12-hour chart, and the 3-day chart is forming a AO versus PA slope differential. HDF's neutral but will short when we get a red AO bar on the 3-day chart below. LTFs will continue to scalp swing trade. New: only reckless spending by both parties can undermine the US dollar as reserve currency. Trump and Biden have normalized huge deficits and have put us into the worst fiscal crisis of all time. Don't blame Bitcoin, says Galaxy Digital CEO Mike Novogratz. Also, top 10 biggest Bitcoin mining companies. Last week we've seen a big increase in the valuation of the Bitcoin miners, with some making a lot of gains. With a total market cap of $20.7 billion, currently sitting at a spot 133 ranked by market cap from all the categories. First one, Mara, is 5.3 billion, Riot 3 billion, CLSK 2 billion, and then we go for others, so lower than $1 billion each, which is 870 million, 870 million, and the lowest one at the 10 spot is at $340 million. The biggest percentage gainers of last week is CLSK at the third spot with a 1395, up 66%. Iron sitting at the 9th spot with 594, up a 58%, and the last one is a 10th spot, but the third as the biggest gainer with 40% increase. Valuations and stock price. Whenever looking at valuation, always keep in mind that the valuation determines also futures upside. Combined with growth prospects, some miners are already much higher market cap than they were in the last cycle, despite their stock price being lower right now. Is this bad? Well, this isn't bad at all, but I want to address that you don't need to look solely into stock price, because the stock price of CLSK is now lower but the valuation is much higher. See the pictures below. As this difference mainly happened because of stock dilution, in order for CLSK to grow, as long as they can outpace growth without diluting too much the stock price, with continuation of reach new highs. And it's about the combination of the factors. As CleanSpark progress, they are growing their production and efficiency rapidly, which positively impacts their stock price and valuation, and also their revenue is growing and got a net profit in Q3 2023. FASB rule change will impact miners positively. So Financial Accounting Standard Board sets accounting rules in the US for the Bitcoin miners. The new Financial Accounting Standard Board rules means they can report the value of their their Bitcoin holdings at current market price, not just what they paid for them. This can make their financial health look better on paper, as it allows them to show the full value of their Bitcoin assets on their balance sheets, and this is especially beneficial for the Bitcoin miners because it can make their companies appear more valuable and financially stable to investors and lenders. So did your portfolio also see some growth this past week? Mine literally flew the Bitcoin miners and Palantir moving rapidly. You just got this. Grayscale foresees a distinct halving effect on Bitcoin's market trajectory. So, Bitcoin growing use cases strengthen market positions. Grayscale's latest research indicates a surge in Bitcoin's on-chain endeavors, with the technologies like ordinals breathing new life into Bitcoin's utility. These developments bolster the case for spot Bitcoin ETFs, which tends to support elevated future valuations. As Michael Thau, a Grayscale researcher, notes that Bitcoin is evolving beyond its digital gold status, signifying a transformation with profound market implications. Halving's implications beyond reduced miner rewards. Although halving curtails miners' revenue in the short term, the fundamental and market structure signal a positive shift. The forthcoming halving requires less purchasing pressure to maintain prices, potentially leading to an appreciation in value. Zhao elaborates on how to reduce the block reward from 625 to 325 Bitcoin cuts as the unusual sell pressure in a half, thus alleviating the downward pressure on prices. The Grayscale reporting also spotlighted the transformative effect of ordinals and BRC20 tokens on Bitcoin's transactional framework. This innovation has already infused over $200 million in transaction fees for miners and is projected to reinforce this trend, propelled by sustained developer interest and ongoing Bitcoin blockchain enhancements, as overall the confluence of reduced selling pressure, enhanced on-chain functionality, and the innovation of the new Bitcoin-based implications set a stage for a potentially bullish future for Bitcoin following the next halving event. Next up, Bitcoin fluctuates around 48,000 as increased price volatility causes liquidation spike. So the Bitcoin price volatility has caused a spike in liquidations as the digital assets value has posted gains of over 11% in the past week, and the circulating supply and profit has increased to over 90% in the past 24 hours, and according to data from the block. The price of Bitcoin has increased by over 11% in the past 7 days, but recent price volatility has caused a spike in liquidations. And according to Bitfinex head of derivatives Jack Kuhner, Bitcoin's value appreciation over the past week has been driven by spot market traders, as the majority of buying has come from spot takers, meaning market orders by aggressive buyers in the spot markets, Kuhner told the block. So last Monday, the price of Bitcoin hovered just above the 42,000 mark. However, since then, most liquidated leveraged positions have been short, according to Kuhner. And as the price has increased over the past 7 days, it caused a large amount of short liquidations, and this has further propelled the price upward, he added. So the fluctuating price actions in the past 24 hours has caused a spike in cryptocurrency market liquidations to the sum of over $111 million, and according to CoinGlass data. In the past 24 hours, 42,122 traders were liquidated, with over $30 million Bitcoin leveraged positions being wiped out. That's all the information we got on today's video, so don't forget to subscribe, like, and share. See you in the next one, and peace.